Hello, everyone. Welcome to another video. This is actually a continuation of my previous videos on intangible assets, where I have talked about, the criteria for research and development expense. And this is a very common question on your Module 11 financial reporting exam for the qualification program of HKICPA if you're studying for that. And I wish you the very best for the exam. It's a little difficult exam. They often will test you on this research and development expense question. They sometimes will give you, small transactions with not a lot of information, where you will have to make a judgment call because they're actually testing you on accounting judgment as well, right? So that's one part that you have to demonstrate in the exam, how good you are with that. And with judgments, it's all about practice, right? If you haven't done enough practice, then you might not be able to interpret the words rightly, which are written in the question, and therefore your judgment call will be bad. That's what I will say. So before we get started to do these questions, there are two questions that I will try to demonstrate with the best of my ability on how to answer these questions and how to go about these questions, or how to exercise your accounting judgment. But before that, if you think these videos are helpful to you, please let me know in the comment down. Just comment down below, and let me know what kind of videos you would like to see. And don't forget to subscribe to my channel. That's actually, that's a good motivation for me to continue to keep doing these videos for you if you find them helpful. So without further ado, let's look at those two practice questions that I have been talking about, and we will see how to treat these research and development expenses and how to exercise accounting judgment, right? So practice question one, you can see it on your screens, right? So shoeware company SW is developing an innovative system for making a new product for sale, right? So it's kind of already giving you an intuition right there that there's probably something to do with research and development here, because they have used the word developing, then innovative system, and a new product, right? So these are the keywords. So I would say I would highlight these keywords: developing, right? So developing is one keyword, new product is another keyword, which is indicating towards that company is trying to develop something new. During the first half of the year ended 31st December 2021, the project incurred cost of $2 million to carry out research for the evaluation of materials to be used to manufacture the product, right? So they have used a very, very important keyword here, research, right? So as a thumb rule, as an accounting student, you should know this as a fact that research expenses are expensed out. They go on profit and loss, whereas development expenses are something that is capitalized, and they won't be charged on P&L. They would actually be shown up as intangible assets on company's balance sheet, which would make company balance sheet look good, right? So that's one thumb rule right over there that you must remember when looking at these questions, right? So what company is trying to do here is they're trying to research for new material evaluation of new materials that company might use to produce the new product, right? So they're trying to find things. Nothing is certain right now, but they're just trying to research on their options, right? So during the second half of the year, now you have to pay attention to these things as well. This is first half of 31st December 2021, which means first 6 months. So if I have to put it in timeline, which is very important for financial accounting exams, timeline is utmost critical. Students sometimes do not pay attention to timeline. That's from my experience. I have made those mistakes myself. So I will be very honest right there. Sometimes I do not pay attention to timelines, but which is very critical. And then in the second paragraph, it says second half, right? The second half means the second from July to December. So during the second half of the year, 31st December 2021, the project incurred technician salaries of $4 million to build a prototype of the product, right? So this is a technician's salary. What type of expense is this? This is a technician's salary, first thing, to build a prototype of the product, right? So the expenses incurred to build a prototype of the product. So you see the nature of the expense. It is an expense, but the purpose of the expense is different. First expense is done for purely research purposes, like the first half of $2 million It's purely for research purpose, right? So companies trying to find a new, it's trying to find a material that they can use to produce a new product. Whereas in the second expense, it is again an expense. It's an expense, but the purpose of the expense is to build a prototype, and they were paid to a technician to build that prototype. SW, which is again a shoeware company, also known as SW in this case, SW has completed its technical feasibility of the new product and expect it to be ready and available for sale in the market by December 2022, right? So the keywords here would be technical feasibility of the new product, and they expect they expect it to be ready and available for sale in the market by December 2022, right? So these are very important keywords to understand the question, which I have explained already. The last paragraph is actually telling you that, it's telling you the viability of the product, which you need to judge based on the criteria, right? So I've written the question, which is again, it's basically saying that how these costs would be, how these costs incurred during the development will be reported on its financial statements, right? So the first expense, $2 million, right up there, you don't have to think much about it. It's a research expense. It's going to go on a P&L. Of course, you need to explain. You definitely need to explain why it is an expense. It is an expense because it is incurred during the search of new activities. You can find the exact keywords in your accounting standard, which is HKAS 38, right? So I'm just trying to produce this video in a very simple language, because that's important to understand. It's hard to understand in accounting terms. But again, it's very important that I would like to remind that it's very important that you use the right jargon in the exam, because your examiners will pay attention to jargon. You can explain things in simple words, and you are probably right, but the world doesn't work that way, unfortunately speaking. You have to speak in jargon, and you have to write in jargon. So it is what it is. But for $2 million, it's a research expense, and you can explain it by looking at the words used in the standards, by focusing on the purpose of the transaction, right? So $2 million, it's an expense, and that's done and done. It's done and dusted right there. The second expense, which is about $4 million, is a technician's salary to build a prototype, right? Now this is where you have to exercise your judgment, right? It's a confusing expense right there. Now, you don't have something very concrete. The product might fail because it's just a prototype. You might ask questions like, what about market research, whether the product has demand or not, those sorts of things, right? So you would have to look at this like 1, 2, 3, 4, 5, 6. So 6 criteria, which is coming from accounting standard HKAS 38, right? So you would have to judge the transaction based on that, and then again, what accounting standard says in terms of what cost could be capitalized. That's again in the accounting standard, and what cost cannot be capitalized for the purposes of development expense, right? So you can actually refer to paragraph, I think it's paragraph 66 of HKAS 38, but you can double check on that. I think it's that. So actually, that paragraph will tell you. There's a paragraph in the accounting standard which will tell you what cost you can actually capitalize as development expense, right? So they have used so you see the word here, technical feasibility, right? So they have told you in the question, they have used the word technical feasibility, right? Then the company is also expecting that the product will be ready and available for sale. So they probably have done the market research. It's just that they haven't mentioned it in the question. So that's where you would have to exercise your judgment, right? It's not explicitly written, but it already implies that, right? So technical feasibility is there. The management intention to complete the intangible asset is right there, right? So it's going to be available for sale by December 2022. So that's right there. ABC is done. How the intangible asset will generate probable future economic benefits, right? So once they are able to sell the product, there will be some economic benefits to the company in terms of revenue, the availability of adequate technical, financial, and other resources, right? So that's what they have. They have the technicians who are producing. They have already incurred salaries expense for those technicians who are helping them produce that prototype, right? So that's right there. and the ability to measure reliably the expenditure attributable to the intangible asset during its development. That's already there because the company is telling you that they have incurred $4 million as in salaries expense for the technicians to build the prototype, right? So they have measured, you can see the number right there. If they wouldn't have told you the number, then you can question that, okay, I really don't know what kind of, like, what is the total amount of the expense, right? So they've already told you the number. So pretty much it's meeting the criteria from here and there. So therefore, you know, the technician's salary expense of $4 million to build a prototype will actually be a development expense, and the company can capitalize that on its 2021 financial statements, right? So that's for question one, practice question one. I hope you found this very helpful in your learnings. Let's look at practice question two, which is similar in nature, which is very similar in nature again, but the more practice you do, the better it is. But in this video, it's only 2 practice questions, but you can comment down below, as I always encourage you to do so, to let me know what kind of videos or on what topics you would like to have videos on. So let's look at this practice question 2. If you read the question, explain the required HKFI's accounting treatment of the issues about preparing relevant calculations and discussing the impact. I would be verbally discussing the impact. You can make the calculations because you're already at the advanced stage. You are writing module 11 financial reporting exam. I'm pretty sure you are well versed to do the calculations by yourself. So I would be actually verbally discussing and I'm guiding you through like how to think through these questions basically. And then where appropriate on the statement of profit and loss and the statement of financial position for the year end 31st December 2020, right? So that's basically the question. Again, it's financial reporting. It's about financial statements and accounting treatment. So let's read the question. During the financial year end 31st December 2020. So this is, again, as I said, timeline is important. You can highlight this. Their year end is 31st December 2020. YUU PLC incurred £188,000 of research and development expense. So this is the total expense. This is the total expense which is going to be divided among research and development, right? So this is the total expense that company has incurred for research and development, right? So they have incurred, company has YUU PLC has incurred £188,000 in research and development expense. On 30th May 2020, YUU PLC determined that the development of the new product was commercially viable and technically feasible. So again, commercially viable and technically feasible, it's right there. It's very important key terms. You have to understand, you have to just highlight those things right then and there. And that happened on 30th May 2022 because, you know, I want to pay attention to timeline. It's very important. It puts things in perspective. So £43,000 of the total costs were incurred before this date, right? So now you see why dates are important. I hope you see why dates are important. So £43,000 were actually incurred before 30th May 2022. So any expense before 30th May 2022 is a research expense. It's actually a research expense. So £43,000 is going to be a research expense because on 30th May 2022, that's when the company determined that, you know, my product is commercially viable and technically feasible. That's where the development criteria is met right there and then, and any expense after that will actually be eligible for development expense. Now, that's only eligibility. If it can be capitalized or not, that's very different thing because you would have to look at the type of the expense that is incurred. And that's what this question will actually talk about in the last paragraph. You will see, you will see that, and that's why you should actually refer to. I think it's paragraph 66, but forgive me if it's not that. There's a paragraph. I do remember that there's a paragraph in HKAS 38 which tells you which development expense you can capitalize and which expense you cannot capitalize. Then let's look at the last paragraph. The remaining costs were incurred in the period up to 1st October 2020, when the product was launched, and included £15,000 spent on product launch advertising. Right. So the remaining costs were incurred in the period up to 1st October 2020. So 188,000 minus 43,000, because that's already gone. 43,000 cannot be capitalized. So you would have to do 188 minus 43. So any expense after that is actually eligible for development expense. When the product was launched and included 15, so they launched the product on 1st October 2022 or 1st October 2020. Then for the launch, they actually incurred 15,000 pounds spent on product launch advertising. Now, this is right there. This is the cost which cannot be capitalized. It's an expense. Now, why you cannot capitalize this cost? Because it's a marketing expense. It has nothing to do with the product feasibility or viability or with economic benefits, right? So marketing expense is done. There's like how that marketing expense will help generate probable future economic benefit, right? Because that's the definition of asset. If you look at the definition of asset, the very basic definition of asset, which will come from HKAS 16, the basic definition of an asset is that the cost should be made reliably measured and the economic benefits should flow to the entity. These are two main important aspects for the assets to be recognized. Once they meet this criteria, then they can be recognized as an asset, right? So it doesn't really fit into this 6-pointer criteria, that marketing expense. Plus, actually, again, HKAS 38 will tell you somewhere in that standard that marketing expense is not an allowed expense to be capitalized. It's going to go on profit and loss statement of profit and loss, P&L, right? So this 15,000 pounds will not be capitalized, even though that has been incurred after 30th May 2020, right? The new product has an estimated useful life of 10 years with a nil residual value. Now, again, this is an important because there's a depreciation right there for assets. So the life of the asset is 10 years. They have given you this information because it's useful. So 188,000 is the total expense, minus 43,000, minus 15,000. 43 plus 15 is something that will go on P&L. There will be depreciation as well. So first you will have to exclude this 43 and 15 from 188, and the remaining amount will actually be capitalized and divided by 10 as estimated. We will assume that they are using straight line depreciation. In this case, they haven't stated the depreciation model, which depreciation model will be used. So we can safely go for a straight line method in this case. And then there will be depreciation charge on that too, on the remaining amount. So be sure that you exclude 43 and 15 from 188, because that's the remaining amount that will be capitalized. That's the development expense, and then that will go on balance sheet, which is an asset, intangible asset, which will be depreciated over 10 years period, and you will divide by 10. Then there will be an additional depreciation expense, which will go on statement of profit and loss. So I hope this explanation, this verbal explanation, and how to approach this problem, how to exercise the accounting judgment, and how to highlight those keywords, how to pay attention to accounting timeline, was helpful for you to prepare for questions on research and development expense for your module 11 qualification program of HKICPA. Thank you very much for watching this video until end. If you have been watching this, and as I said, let me know in the comments down below on what topics you would like me to make more videos on, and subscribe to my channel for more videos like these if you found them helpful. Thank you very much for watching this video.